This week, we see how in today's market, rising interest rates continue to reshape the economy and the real estate landscape. I'm Tony with Clarkson Santoro, and this is our real estate update for the week of Friday, October 6th. We know that selling or buying a house can be stressful and confusing. In this series, we use our more than 50 combined years of experience helping clients buy or sell homes to explain what the latest real estate trends mean for you as a homeowner who is thinking about selling your home, or as someone who is looking for a house that you will love to call home. This week we had 22 homes available on the market, which is 2 more than last week, with an average asking price of $1,959,000, which is just under last week's average asking price of $2,198,000. 4 homes went pending, which is 2 less than last week's 6, with a higher average asking price of $2,333,000, up from $2,240,000 last week. And 5 homes went closed this week, which is 1 less than last week, with an average sales price of $1,806,000, which is slightly lower than last week's average selling price of $1,009,073. So now that we've seen how the market performed this past week, let's look into the broader trends that provide insights into its overall health and potential future direction. Before we proceed, if you find this information helpful, you can subscribe so you will never miss out on future updates. And why not share this with a friend as well? Everyone deserves to be in the know about their local real estate market. All right, let's take a look at those market indicators, shall we? Our inventory in the past 7 months, our inventory has fluctuated between 15 to 25 homes, with only minor deviations from this range. This represents approximately 40% of our typical inventory level. This limited housing supply has provided sellers with a notable advantage in negotiations. Moreover, the number of coming soon listings remains low, indicating a lack of impending new inventory entering the market. Despite certain concerning trends that we'll talk about in a little bit, this signals a persistent tightness in the market. Our turnover rate has now returned to the normal range, signaling a slowdown in the market compared to the rapid pace the past 6 months. It is essential to understand that this metric is influenced by both inventory levels and pending sales, with the primary factor behind the slowdown being a decrease in sales, not an increase in inventory. However, there is a potential risk of new inventory flooding the market, which could further suppress the turnover rate. As we enter the traditionally slower fall and early winter season, we do not anticipate a significant increase in inventory. As the market experiences a deceleration, we observe a noticeable decline in over-asking sales prices. This week, they have reached just 1.6% over asking, marking the lowest point in the past 6 months. We foresaw this decline and appreciate that it may persist, even as closing prices continue to rise. It is worth noting that while 1.6% above asking is still a commendable figure, it signifies a diminishing market vigor. We attribute this primarily to the changes in interest rates, a topic which we will address shortly. But first, let's look at the average sales price. Those average prices have once again seen a 1.2% increase this week. This uptick was expected as it aligns with the asking prices of pending sales within the past 30 days. Based on the current pending sales prices, we anticipate that the average sales price in San Ramon will approach the $2 million mark in the next 2 to 3 weeks. It's important to keep in mind that closing sales prices reflect transactions from over 30 days ago and may not fully capture the current market dynamics. Additionally, due to relatively small sample sizes, the average sales price is susceptible to significant fluctuations in value. Stock equities across various sectors have experienced some setbacks, including a slight decline in high-tech stock valuations this week. The index we tracked showed a marginal drop of less than 0.5%. Over the past 2 months, though, the value of Silicon Valley's high-tech firms have decreased by 10%. This decline has caused some potential buyers in that region who were considering a move to our valley to exercise caution and reevaluate their decisions, especially in light of interest rates. That ongoing concern over the past year is becoming increasingly problematic for buyers in our market. Interest rates have once again reached levels not seen in the last 23 years, significantly impacting the real estate market. Today's rates stand at 7.49%, marking an increase of 18 basis points compared to last week, which was already a high watermark. Around this time last year, rates first exceeded 7%, a milestone not seen in the previous 2 decades. And we are now a year into interest rates consistently above 6%. This is continuing to have a noticeable impact on the market. Overall, the continuous rise in already elevated interest rates is creating a significant headwind in our real estate market. One of the challenges posed by increased rates is that investors tend to divert their capital towards treasury bills and CDs, shifting away from equity markets, including the high-tech sector. This presents a double challenge for our market as buyers see their stock options lose value, while the cost of their loan continues to increase. While low inventory levels may still favor sellers, an accumulation of inventory could potentially lead to a decline or even the disappearance of bidding wars, ultimately affecting property values. In such a scenario, serious sellers will need to be strategic in their pricing and thoughtful in the presentation of their home to remain competitive in today's market. Thank you for joining us for our weekly market update. We hope the summary and commentary helped you understand how our market is affecting your options. If you have any specific questions about navigating the market to sell or buy a home, don't hesitate to drop a comment below or reach out to us directly. We're here to guide you every step of the way. And don't forget, if you found this information helpful, to share it with a friend and hit the subscribe button and the notification bell so you'll always be up to date on the latest real estate news here in San Ramon. Thanks again for joining me. Have a safe weekend, and we'll see you next week with a new update.